Hi, everyone. Welcome to our, let's say, webinar interview. My name is Mark Lightfoot. I am the owner of SnowOnly. And today we have Sharon Revol from Cafpi International. You are the head of Cafpi International, Sharon? Yes? That'll do.
Yeah.
Perfect. The reason that I got Sharon on the call is particularly to do with mortgages. We get so many people asking with a variety of options, whether it's a small mortgage, a large mortgage, etc., etc. But today's call, we're going to go over in general some topics to maybe give people advice. But at the end of the day, as Sharon and I have just discussed off camera, that everyone's situation is unique in terms of obviously where they're from, what they earn, where they're trying to buy. So we will put a link in the bottom to contact Sharon via SnowOnly. So no problems. If you have any personal questions or you're in the process of buying or considering buying, then Sharon would be the person to speak to about a mortgage in France. And Sharon, just before we go on, we are SnowOnly, and this is subject to ski properties. But assume you don't only do ski properties.
No, that's correct, Mark. We cover all of France, including Corsica.
Yeah. So if you are not buying a ski property with SnowOnly and you would like to buy a property in the Dordogne, Sharon would still be the person to speak to. So let's see if we can run it around ski properties, because that is the industry that we are in and the people that I am dealing with. I'll start, Sharon. These are all questions that are easily answerable to you. But I just want to start quickly. One of the things that, first of all, I think it's important to listen to this whole conversation and to speak to Sharon, because we've had a lot of situations recently where people have read things on the internet or got advice from people that are not true and don't apply. So it is best to speak to Sharon, who is the expert in this, just to make sure whatever you're trying to do is possible or not possible. First of all, Sharon, I just want to get into the point is, first question, what is the lowest mortgage that you can get for people? Because there's a lot going around at the moment that anything less than, let's say, 250,000 is not possible. True or not?
Not true, thankfully. The lowest possible mortgage amount generally tends to be around 80,000 euros. It depends on the bank. Some banks don't want to deal with a smaller amount, so they set a higher minimum amount. Because it's not profitable for them, because they're going to spend too much time on a mortgage application. However, we do have partners that will accept the lower mortgage amounts. Afterwards, there are certain things in France, criteria that we have to look at. We go back to it being individual to everybody's situation, but we frequently arrange mortgages, for example, studios and ski resorts, 70, 80, 100,000, and we're able to arrange mortgages on those properties, yes.
Okay, so a nice knock-on effect from that is loan to value, how much deposit they have to put down roughly. If it's, let's say, an 80,000, what would they have to do?
So the deposit amount will depend on your personal situation. It depends where you live, whether you're salaried, self-employed, your country of fiscal residency, because that also determines which banks we can use for you. Generally speaking, deposit amounts vary between 15 and 30% of the purchase price, excluding fees. Some banks may ask for up to 50%. It really depends on the situation, and everybody's situation is different. So we might give you an option of a 50% mortgage, but with better conditions, and say with a 15% deposit.
Yeah, understood. Just to kind of, as we're at the beginning of this, just to put it out there, what makes Cafpi different from any others? I know we spoke about this a couple of weeks ago, and you said you had, I can't remember the exact words, a worldwide option or whatever it is. So as a broker, you have access to everything, do you? Not a limited amount?
So there are two parts to Cafpi and Cafpi International. Cafpi as a firm has over 50 years existence. We are France's leading mortgage brokerage firm, 230 branches, over 1,000 brokers. We brokered over 30,000 mortgages in 2024, 2023. And then there's Cafpi International. I personally have 22 years experience as a mortgage broker dealing with international and non-resident clients. We're a team of 14 people, and we are whole of market. So the strength of
Yes,
whole of market, yes. So
that's
where
words.
some niche brokers, they don't channel enough in overall business to be able to work with certain banks, because we have the power of Cafpi behind us from our kind of our national brokerage activity. It enables us to work with all of the different banks, including exclusive products, but we also work with banks outside of France, which is the Cafpi International part as well. So we work with banks outside France, say in Switzerland, in Monaco, in Luxembourg, in Germany, in Belgium, etc. So it gives us alternative solutions for different clients as well.
Yeah, okay. Just to kind of go back, I just want to fill that in. Obviously, you said that you can go as low as 60, 70,000 euros, but also on the upper end, again, I assume it's untapped in terms of obviously people's borrowing power.
Certainly 38 million, 40 million is not unheard of. For example, in the south of France or in exclusive ski resorts, it's totally possible that we arrange mortgages of those amounts as well.
Yeah. So at the moment, what's the loan to value? If you could just give us a bit of a kind of general rule of thumb about are people borrowing variable rates, capped rates, fixed rates, whatever it is. What's the situation in France at the moment for people borrowing money?
France has a very conservative mortgage lending market. The banks have a legal responsibility to lend responsibly, and the norm in France are long-term fixed rate interest rates. So, for example, 3.55% fixed for 20 years, 4.1% fixed for 25 years. That's the norm. People here don't tend to take variable rates. There are a couple of variable rate products on the market, but they're quite rare, and we're in a period, even though interest rates have gone up, they're still very low. We generally see the comeback of capped rates and variable rates when interest rates are much higher, over 5%. So if you think at the moment we're between 3.5 and 4.1, 4.2%, we're still low enough for the banks to keep offering fixed rates. Because of the way they work affordability, the interest rates impacts how much you can actually borrow. So that's why when we go into a period of higher interest rates, the banks bring back variable and capped rate products, but they offer more risk for the banks as well. And also in terms of lending responsibly, which is why the French favour long-term fixed rate mortgages.
Yeah, understood. So if we kind of just bring it around to the ski property side of things, I know that we've kind of discussed some things in the past. One of the things, obviously, that people are looking at the moment is the availability to get mortgage based on leasehold properties. A lot of people obviously think you can't, but as we've just obviously established with some developers, although they're offering, let's say, lease-back properties, the lease is on the rental and not the ownership of the property itself, which is freehold. So just in your words, I guess, is it possible to get mortgages on leasehold property?
It is, because as you've correctly stated, the property is actually a freehold property with a tenancy, with a lease agreement with the management company who then let the property out. So it's two separate things. The owner, the buyer, will actually have the freehold property. They're fully owner of the property, even though they're letting it out via the management company through the lease that they sign with the management company. And that's what's of interest to the bank, is that you actually own the property. So therefore, their financial security, the legal charge they have on the property, is actually on the property and not shared with somebody else, i.e. a depreciating lease. So in terms of borrowing, it's completely possible to borrow against a leaseback property. The lenders will look and see, obviously, where the property is, the property management company. There are some extremely good and well-established property management companies in the Alps, which I know you work with. So in terms of their lending, they don't have any issue. They can also take some of the rental income into consideration for your debt-to-income ratio. And with regards to the VAT, because there's the VAT element on new build properties as well, it will depend on the bank, but some banks will base their lending on a percentage of the ex-VAT price, and other banks will do the same, but they can also do a short-term bridging loan for the time you recuperate the VAT, so that you're not having to outlay the full VAT amount and then recuperate it. There are different options. Again, it depends on profile, development, and your overall financial situation.
Yeah, I think that's a really interesting point. So a lot of the people that we speak to at the moment, they have a budget up to a capped amount. And obviously having a 20% rebate on the VAT can be the difference of, if you have a budget of say 500,000, but a budget of 400,000, but you see a property at 500,000 and you think it's just out of reach, but you are going to reclaim the VAT. As you're saying, it's possible to get a short-term bridging loan on the 100,000 difference, because the bank know that it's going to be repaid if you reclaim the VAT. So it is possible to maximize your budget up to 500,000, assuming you are going to reclaim the VAT on that property. So that's a possibility.
Yes, obviously you have to be able to afford it from the financial perspective. So you still have to meet the yeah. It means that there's less financial outlay in the beginning, because you're bridging the 100,000 that you would have to cover for the VAT. And normally the properties are completed within a year to 2 years anyway. So it's only for a short term. And bridging loans aren't that expensive in France. They're just a tiny little bit more expensive than a normal fixed rate loan. So you're not spending like 10% on an interest rate.
Yeah, we've had a lot of people last year actually that had that situation and thought that they had to then sell a property or something like that to generate the extra money, because they wanted maybe a 2-bedroom plus a cabin that was slightly more expensive, or they just wanted to get that slightly better location, which became unaffordable. But obviously this is a very good option for people to change that perspective of their buying power in terms of buying the property. You touched on before that they will take into consideration the rental from a mortgage if you did the rebate anyway. Is that correct?
Yes. So not all lenders will take into consideration the future rental income, but there are lenders on the market that will. The percentage they will take does depend on the lender. Sometimes it will be they will take into consideration 70%, 80%, or 90% of the future rental income. And that's also the case for properties that aren't necessarily on a leaseback or on a rental scheme. For example, if you just buy a normal standalone chalet or a standalone ski property, and your intention is to let it out, then providing we can provide a rental estimation from a local letting agency, then we can take a percentage of the future rental income into consideration as well. And that helps improve your borrowing capacity as well. So obviously if you're earning more income because you're taking into consideration the future rental income, then it means that you can borrow more as well.
Yeah, understood. Just 2 more questions, really. Obviously, this is more of a general interview with you, because we, as we said, each case is unique, and I do want people to contact you and discuss their unique cases. But just a couple of ones, just to kind of sum it all up. What is the process? The kind of 2-part question. What's the process for borrowing? Just so people have some sort of understanding. And also, how long does it generally take to do it? How much work do they have to do? Because obviously when you put these to people and you go, obviously you need to do a mortgage, there's a certain amount of information they need to provide. So what's the reality?
The reality is, don't apply for a mortgage in the month of August, because all of the French go on holiday. So that's a good starting point.
We've seen that for a lot of things. Yes, I agree.
So, but to be more realistic, it's best to get your ducks in a row early in the process, so that you determine what your actual borrowing capacity is and what your budget is, so that you don't avoid disappointment. In order to pre-qualify for a mortgage in France with a bank, you actually have to have a property in mind and a signed reservation contract. So the advantage of working with a broker such as ourselves is that we're able to pre-qualify you without having a property, so that you're able to ascertain your budget. The pre-qualification process is literally like a know your customer process. So we will look and analyze an application in the same way a bank will. Obviously, there are things that we won't have to go into detail on, because we're not the ones opening up the bank account, etc. afterwards. So we don't have to do due diligence in that you are who you say you are at that stage, because we're not lending you the money. But we check things such as affordability and cross-reference with every bank's criteria, so that we're able to put forward these are the options that are available for you. These are the quotes. This is a feasibility certificate. So yes, we do ask for personal information because that's what the banks will ask for. Typically, they have to be able to prove your income. So that's things like your last 3 years, tax returns, last 3 months pay slips, employment contract. They also have to ascertain what your debt-related outgoings are. So things like your mortgage statements, loan statements, lease agreements. Your family situation, so whether you have a marriage contract, it depends where you got married, but marriage contracts differ in the world. And then there are things like your savings and assets. So obviously there's your deposit for the property, but the banks are very interested to know, you're buying a second home, a rental investment, how much actually do you have left over in case, this is a lifestyle as well as just a rental property. You're buying a property in a foreign country. What happens if you lose your job? How are you going to manage, etc.? So all of these are important elements. And as brokers, we look at the overall picture and we cross-reference, as I said, against our lenders and their criteria. And then we can basically say to you, so that you can go to contract, this is the details you need to put in the mortgage clause in the contract. So that's when you make an offer on the property and you decide to buy and proceed. At that point, we then formalize the mortgage application with the bank. Everything is transparent with you. We have all of your documentation. And then we basically act like your lawyer in a way to plead your case with the bank. The banks with whom we work are all very used to working with non-resident and expat clients. We're obviously very used to working with you too. So we're used to putting forward and defending applications. Then there's like an analytical process which takes place within the bank. It's all very mysterious. It's not really, it's just long. In France, it's not computers making decisions, it's humans. And as I said earlier, everybody goes on holiday in August. It's the reality of the French market. We don't have credit checks. The UK, the US are very heavy on credit checks, and it's quite often the computer makes a decision. In France, it will be the branch manager or the analyst, or it might have to go off to a lending committee if it's for a higher amount. The lending committee might be local within the branch, or it might be based in Paris or somewhere central. So every situation is a little bit different, but generally it's about 6 to 8 weeks, which fits within, we say a purchase in France takes about 3 months. So the 6 to 8 weeks fits within the 3 months purchase process. And then when you have your mortgage offer, you have an 11-day cooling off period as well, unless you're buying through a company structure, in which case there is no cooling off period. I think that's quite simple. There is a lot of paperwork involved. So as I said, we don't have credit reports, so the banks have to justify what your income, your debt, and everything else is. It can feel very intrusive to some people because we ask for bank statements, the last 3 months bank statements. But it's best, we're here to help you get a mortgage. So it's really important for us to understand your situation in order to best present it to the banks so that you're successful in your mortgage application.
Yeah, interesting that you just say there about 6 to 8 weeks. A lot of the things that we kind of look into is generally about timing. So what's your advice here? So would you, if you're looking to buy a property, typical case scenario, let's say I've got 500,000 euros to spend on a property. Would you speak to you prior to even looking to ascertain how much I can borrow and how easy that is? Or would you go purchase a property? Actually, that's a lie. Would you go and make an offer on a property, and during that reservation period of obviously the process, then you would go through your mortgage application simultaneously as it's reserved, and then on the reservation you go subject to mortgage approval? Which one would you advise to do?
I would advise to speak to us as early on as possible, because that way, for example, we talked about the VAT element earlier. You would know what's possible in your situation. It might help you get an extra room in your apartment, knowing what possibilities are available to you. However, we do obviously, we get contacted by people who have even purchased the property and have, they purchased cash and then they decided, well, actually, we would like to have a mortgage. In the 6 months following completion, we can put a mortgage on the property for non-residents. So you can use the leverage. Literally, we have all sorts of scenarios of people coming to us. My advice is obviously to get advice early on, and that way you can make sure that your situation is perfect. Sometimes we'll look at a mortgage application and say, well, maybe it would be better if you waited 6 months. It would give you more of a budget, because if you buy something and you decide it's not what you actually want and you wish you'd spent more, maybe in 6 months you could get that. So we really tailor our advice to people to make sure that they're happy, and that they get the product and the mortgage that suits them.
Yeah. The just something you picked up on there. Your mortgage application in principle, how long does that last?
It's a very difficult question, because in the world at the moment we have all sorts of events, and the banks can change their criteria anytime. So providing there's not a war or you don't lose your job, then the conditions within the banks tend to be quite stable, because the French lending criteria is set by the French government. However, there can be things which, as we reach the end of the year, we can find some banks that have used up their mortgage budget for the year, and other banks, maybe they have an envelope of mortgages left still to lend. So we can see that there would be a little bit more flexibility. So it's a really difficult question to answer. And we would advise, say we did like a pre-qualification 4 months ago, we would advise still, before putting in an offer, just to check back in with us to make sure what the situation is at that time for you specifically. Another example has been for our US-based customers. Some of the banks got a little bit scared with Donald Trump as well. I don't want to go into political things, but they stopped or reduced their lending to the US market, which meant there were fewer lenders that would be willing to lend to the US market at one point. It's opening up again now, but it means that the other banks have been overwhelmed with applications. So there are things sometimes that can happen which are outside of kind of our control, the bank's control, which is why it's important to check in as well.
But this is the inside knowledge that you provide, and you can see that flow of what's happening. Sharon, thank you so much for your time. I don't think we need to kind of go too much further on everything. I think the summary is whatever your situation is, and if you are considering buying a ski property or anywhere else, I think the main criteria is to speak to Sharon as early as possible to see what you can do and what possibilities there are. It allows you to obviously be a bit more comfortable when you go to buy the property, and every situation is slightly different. So no matter where what you've read on Google or who you've been advised from your friend, Sharon is definitely the person to speak to. And you are whole of market, as I remember. So obviously you have access to the most options for you. In all the links below, I'll put a contact for Sharon in there. So if you do want to speak to her, it's easy to get in contact. But Sharon, thank you so much for your time. Very much appreciated and very insightful. And I'm sure lots of people will get in contact very soon.
You're welcome, Mark. Thank you for having me. And I hope I've answered all of the questions.
All very well. See ya. Bye.
Thank you. Bye-bye.